What's up, everybody, and happy Monday. Welcome back to another exciting edition of Ninjacators' weekly live event, Profits at Noon. We've opened up the room just a minute early to give everybody a chance to trickle in, get those best seats, and get settled. Lewis, Mark, it's great to see both of you. I hope you had an awesome weekend. Quick shout out if you're joining us over on the simulcast on YouTube, welcome. Again, getting started in just a minute here, folks. We wanted to open up the room just a minute early, give everybody a chance to get in, get settled. If you're new to these sessions, we'll give you a quick rundown of what to expect, and then we'll dive right into it. Awesome. Everything looking and sounding good. Fire away there in the chat if you're having any issues. If you have any questions today throughout the presentation, do not hesitate to fire away there in the chat. That goes for you over on YouTube as well. We're more than happy to take questions to discuss with you and ensure you're taken care of before we get out the door here today. Mark, hello. Yes, sir.
Hey, Mark.
Awesome to have you. I see we are at noon on the hour. So we're going to jump in, start firing things up. The rest of our regular crew can join us as they trickle in. So welcome again, everyone, to Profits at Noon. Just a quick reminder, we are live 3 days a week, Mondays, Wednesdays, and Thursdays, all at noon Eastern time. And the objective here is for us to show you the levels that we are stalking for entry. We're going to steer you clear of any market traps, news bombs, or surprises that could be waiting around the corner. And in addition to all the great live analysis you're about to see, we're going to show what we call our levels to lock. So keep an eye out for these. These are the levels that you can copy along with us and you can stalk along with us. And then, of course, we encourage you to join us for any of the follow-up sessions because we'll see how all this plays out in real time together. So again, welcome everyone. My name is Nate, co-hosting today's session with our very own Richard Krugel, the man, the myth, the legend. He's going to be taking the reins in just a second here to lead today's analysis. Just a few quick notes before we get going. Again, feel free to fire away there in the chat if you have any questions whatsoever throughout the presentation. And then, of course, Mondays have typically been our tool spotlights. I was out for about a week or so. I've missed all you guys. It's great to be back. But because of that, we do not have a tool demo on deck for today. But next Monday, we plan to be back on our schedule with that. So if you have any requests for any Ninjacators Pro Series tools, anything you'd like to see us break out of the box and get our hands dirty with, we're more than happy to take those suggestions here today. So anyway, enough from me. Let's go ahead and bring in our good friend Richard Krugel. He's going to step in, lead today's analysis, and dish out those levels to lock. Sir, would you take the reins and lead us in today's analysis?
Thanks, Nathan, and hello, everyone. Just a side note, Nathan wasn't with us like he just mentioned last week, so great having you back, Nathan. Looking forward to the $230 following that. So that could potentially be a volatile period. Obviously, there's a lot of, and are they going to actually raise interest rates again? Are we going to potentially see some more this year, or is this going to be the final one? So I think that is the big one for this week. We potentially could see calm markets, ranging markets heading into that decision, especially on the industry side of things. So that's something definitely to look out for. Again, we'll have Wednesday's session, but that will be before that. And then we'll see where things are trading wise, right? And then we have on Thursday, advanced GDP quarter on quarter, unemployment claims, and then to finish off the week, we got a core PCI price index and employment cost index, and also the revised University of Michigan consumer sentiment at 10 a.m. This is Friday, but like I said, the big one to look out for is Wednesday's federal funds rate. Right, that also being said, before I dive into the analysis, we also have some big boys reporting this week. We got Microsoft and Google reporting tomorrow. That's on the large cap side of things. Just make sure my dates here. Yeah, tomorrow. And as well as Visa. And then on this Tuesday, we got Facebook. And then we have Amazon on, when's this? 27th. I can't get my dates right. That's Wednesday, right? No, Thursday. So potentially could also, lead to volatile times there. Again, we'll obviously recap where the markets are at prior to these dates. Again, maybe that within conjunction with the federal funds rate, we could potentially be in for a wild ride or potentially not, obviously. So let's see. All right, back to the ES. Although that's new to this analysis, I use a blend of market geometry, my analysis techniques, a bit of wave counting, as well as pattern recognition, as well as obviously our very important levels to lock, which are these horizontal lines I have here on my chart, and especially where these lines are in relation to some of our market geometry levels, quite often get a really good idea as to where markets might be moving towards and where they might find resistance, support, etc., etc. So we had to look at the perspective of a sequence. I've just been following this sequence higher from around the 10th of March or just afterwards in the ES. And I'm still thinking that we are in an impulsive third wave moving to the upside. Now, prior to this impulsive move to the upside, again, obviously, this whole thing's been an impulsive move. I think that we're busy with the minor fifth wave of the third wave still, thinking that price either topped here in that wave, and then we're going to see a deeper decline, but it currently looks like price wants to push even higher. We might see price reach this median line, which is the center median line finally. It's actually did not reach it just yet. It fell short of that line on two occasions. Now, quite often when you have areas where price actually doesn't meet one of your median lines or your angular support and resistance lines, if you want to call it that, you can then just draw a ray parallel to one of those lines projected from previous areas, and quite often they'll act as support and resistance again, which is typically what happens, and this happened last week as well. On this orange line over here is a great example of previous areas where price undershot a median line, in this case, this dashed one, and projecting that forward, support, and move back up to the upside again. Now, obviously, trying to piece all of this together is how you build the puzzle, trying to figure out where things are going. So still super bullish on the ES, NASDAQ, the YM as well as the Russell, but thinking also about a sequence, got to start being careful that we might be ending or have ended already in this major third wave. Even if we do end in a third wave, let's say price does move higher from here, then I would expect a little bit of a deeper correction to complete to 4 and then even more higher prices at a later stage. Right, so like I said, still super bullish on the ES. Price has been, or just opened below today's pivot point, which was, or still is, sorry, at 4,571, and just reached on the previous candle. We're looking at a 4-hour time frame here, reached R1 at 4,582, and it could potentially extend as high as today's projected range high at 4,596 and a quarter. The question is, if you look at the drop that we had here, and this started last week into this low over here, potentially could have been the end of a correction, but it's not a nice, clear sort of looking correction, something like this that you'd normally get, a zigzag, or whatever the case might be. That being said, if you look at previous little declines here, just one directional, straight back to the upside, which is typically a behavior of a third impulsive wave. So always just trying to give you a plan A and a B of what might be happening. We're either done with a correction or we're still correcting lower. Whereas we potentially had an A, maybe it's going to do this, break this previous high, then get another decline. And even if we do get another decline, I'm still going to be bullish. like I just showed you in the bigger picture of things. So be careful. If we do take out this high, this is probably last Friday's high, we could potentially expect resistance at 4,596 at a projected range, or even as high as R2 at around 4,600. Again, might just start moving sideways here in a relatively, I won't say it's a large range, probably a bit more of a tight range on the ES, leading into Wednesday's federal fund rate, interest rate decision. All right. So could potentially be a quiet period of time leading into that. NASDAQ, similar thing, straight down since last week. Obviously, the structure looks a little bit different here. Same thing that we've said on the ES, and actually should get rid of these labelings here. It looks like this move up here after we had this correction, this looks a bit more to me like a nice APC. That this is now potentially 1, a 2, maybe a 3, maybe it's doing a 4, falling short of this low and then get a high up to the upside. To complete that third wave, I just didn't label it here on the NASDAQ. Like on the ES, where we have this third wave that might still follow and then get a deeper correction. All right, so I still think that is a possibility here. You can see here on my median lines that price actually left the boundaries of this pitchfork, and I call these long-term pitchforks simply because I've had them on my chart for a really, really long time, right? Quite often when you get an area where price leaves the boundaries of your pitchforks, you can, what we call, just copy and paste them. Same angle. Let me just see if I can actually grab this now. And it's locked. Just give me 1 second. There we go. And you project it at the same angle above the other pitchfork, or your original pitchfork, if that makes sense. I'm just going to get that as accurate as I can. And then we'll see, we'll just fast forward this. Look at where price found resistance last week, right at an angular line again, although price left the boundaries of that original pitchfork. So I've said this last week. If you're new to this analysis, please do, come in often. You'll start getting the hang of it to understand what I'm talking about. So we also want to see our price reaction in relation to these lines. Quite often, let's say price were to break this high again, close above that median line at previous act as resistance, then you're looking for targets at your next areas. All right. So quite often they do sort of like act as magnets and really good target areas that price might move towards. NASDAQ, not really bouncing as nice as the ES today. It's been below today's pivot point for entire day thus far. That pivot point being at 15,598. Previous candle reached S1, actually just maybe a pip or two or tick above that at 15,478. Again, it tried to get above this median line. You can see it pulled back towards it. So if we can see a break above that, potentially a move back to these median lines. Again, that could happen today, that could happen tomorrow, but I'm personally expecting a quiet sort of ranging period leading into the federal funds rate decision. That being said, with these earnings coming out as well tomorrow, so forth, could affect these markets as well. So quite a bit of things to look out for this week, potentially volatile, as I mentioned. Right, brings me to the Dow, which has not given us that correction between the ES and NASDAQ. The WIM's been the strongest. We were looking last week at price hitting this upper median line. Again, from a pitchfork that I drew a substantial amount of time back, around here in the beginning or sort of mid-May. And price here has also been following this pitchfork really well. Last week hit this median line at a small pitch pullback, and this is a great example of how we use market geometry to give us both direction, also to figure out where we might find support and resistance. So we had a break above a median line, retest once, twice, 3, 4 times, finally back. You can even see on today's previous candle that we had a nice retest of that again. So potentially looking for a move to the next median line to the upside. Now, I can't tell you if that's going to happen today or tomorrow, but with the strength in the Dow, obviously also super bullish on the Dow. Already price took out R1 at 35,485, just reached R2 at 35,585. Again, is price going to just skyrocket from here? Again, might be a bit of a tricky week to maneuver, and a potential volatile time lies ahead for the YM or the Dow as well. It brings me to the Russell. Same thing. Price hit an upper median line last week, tried to get through it, couldn't, initially failed, moved down, and here too we have what looks like a potential ABC. But price falling a little bit short of these median lines. It just lies underneath today's current price, around about 1959, let's call it 1960. That might still be an area where price wants to pull back towards before potentially another leg to the upside follows. All right, so the Russell's been below today's pivot point. Well, actually was above it at some stage, just closed below it on a previous candle, that pivot being at 1978.4. It actually tested the R1 region, or just a little bit above it at 1988, and now we've had a pullback. So a little bit of a triple bottom sort of thing here on the 4-hour time frame. If we do potentially get a break of the 1967, let's call it 1967 level, we might potentially see a move into these median lines over here, where we also have confluence between, or I should say very close price levels between S1 and today's projected range low, which is between 1959.7 and 1960.9. So that could potentially be an area price might be moving towards. Again, might be tomorrow, or sometime this week, or this could have just been the end of a correction. All right, so this brings us to gold. Been tracking obviously this decline in gold. Actually, during these sessions, we've been tracking all of this sort of topping formation here, and then we had this very sharp decline, all right, after a 5-wave sequence. When price finally broke out of these blue lines, which are basically upward sloping channels, we had a very, very strong decline. Okay, so I've been labeling this decline as a 1, a 2, a 3, a 4, and then we start having this very slow grinding sort of move to the downside, which I mentioned in during these sessions might be an ending diagonal. I still stick to that. I think that was a really good call. Price initially broke above it, had a little bit of pullback to it, a strong pullback where it nearly took out this lows. So technically, this could have just been an ending diagonal. So I'm currently viewing whatever's happening here as corrective in nature, i.e. that we might see another decline. That being said, if this is corrective in nature, we either had an ABCX and now another ABC to follow. So I don't think the upside is just done yet. I think there is more upside in gold. Or we had a 1 expanded flat 2, and then this impulsive third wave, 1, 2, 3, 4, 5. And this either being expanded flat correction with another wave to follow, and then we get a decline again, and then another move to the upside. So a real drawn out sort of circumstances that might follow. So whatever the case is, I'm treating this as corrective for now, meaning that I think there is more upside potential in gold, potentially into the 2000 region, unless price starts melting down here and actually breaks this pitchfork here, which previously acted as support at this higher low over here. So we might see a move back towards this, what I would call an inside return to this median line. So there is some more downside potential, and thus far this decline has sort of been one directional. All right, so again, gold will very likely be influenced by the rate decision on Wednesday. So might expect some more sideways movement here leading into that news event, right? So price has been slightly above and has just closed on the previous candle below today's pivot point at 1966.2. Sort of made a double bottom with this previous low. So we get a break here, we might see price go down towards S1 and today's projected range low, either today, tomorrow, or this week at 1951.8. But like I said, we do get a stronger decline. I'm going to be keeping an eye on this median line sloping to the upside here and see if price can actually find support there. If it doesn't, we get a nice decline, strong break below that, then I'll have to start rethinking whatever has happened here. Might have just been the end of correction. So still falls in line with my initial analysis that whatever this this move to the upside was potentially corrective in nature. Right, and that brings me to crude oil, which has been having a blast to the upside. This after price has been stuck in a pretty large range since the beginning of May. All right, we've been following this range continuously as price, moved and the price structure changed. I was thinking we were dealing with a triangle formation, which could have led to more downside. That didn't happen. Price initially broke above the top of this range. When was this? Around 11th, 12th of July, and has moved back to the upside again. So we might have to start thinking that this was just one hell of an accumulation phase. That also said, the Saudis were also making a lot of statements that they were going to start cutting supply. Which, add a little bit of some time before it actually start kicking in. What was a couple of weeks back with the crude oil inventories starting to come out, it started to show some draw, so less supply. And this obviously could have that effect where prices start moving higher. I do have a pitchfork here that I've drawn from this low where we had this spike to this high around the beginning of June, to this low, probably when was this, the 10th or so, 12th of June. And it's a shift pitchfork setting, and you can see that price has been following this pitchfork really, really well. We had a breakout above this line to kick off the week. Price being above today's pivot point at 76.60, blasted through R1 again, this upward sloping median line, blasted through R2, and has now even gone through a projected high deviation or the second deviation, which is around 78.82, 78.80. So here's another good example of what happens if price finds resistance at one of these angular lines. And on the second visit, or maybe third or fourth visit, if you get a breakout, you look towards the next median line to the upside, which is currently around 79.58, let's call it 79.60. That could potentially be an area where price is moving towards. Also know that we have a 78.6 FIB retracement around 79.39, right about there. And that FIB retracement is just basically taken from these highs that formed around mid-April to this low that formed around the end of April. Right, we had a bit of fluctuation, sorry about that, around the 61.8. And with price now heading towards this median line, a bit of confluence between the 78.6, that median line, which I think price is gunning for. So yeah, we'll see what happens if price does reach that, if we can see some weakness stepping in. Right, so I'm almost starting to think whatever's happening here in crude oil, if it breaks the 78.6, that this was a very important accumulation phase, that price might actually start gunning for these highs around 83.66, potentially into the 84 region or potentially higher. Right, so we're not there just yet. I'd just like to see what happens with price when it reaches here. But I think if it does break above 78.60 with some more decent momentum, it could be, like I said, be gunning for these highs that was set around mid-April. All right, guys, that concludes the analysis side of things. If you've got any questions, then please feel free to drop them in the chat there. Maybe we've got questions from the YouTube side. Nathan will relay them to me. If not, then yeah, thanks for listening.
Perfect. Well, thank you so much as always, Richard. As mentioned earlier, it's good to be back in the house. I was missing you, so it was really good to see the market again through your eyes.
Thank you. You're welcome, Hal.
Absolutely, great to see you.
Hal was on holiday, actually. He told me last week.
Was he? So Hal and I were both out around the same time. Good timing.
Yeah.
Awesome. Well, as Richard mentioned, please feel free to fire away there in the chat if you have any questions about the analysis that we've covered today, our levels to lock, or as mentioned earlier in the session, if you have any requests for some of our future tool spotlights, things of that nature, please feel free to fire away. That goes for you over on YouTube as well. So don't hesitate to let us know if you got something on your mind. Of course, we do have a promise or a threat, depending on your viewpoint, of a terrible dad joke today. So before we get out of the door, we will have one of those back in all its glory. And then, of course, we also just want to put something on your radar. Some of you may already be familiar with it. Just in case you're not, Ninjacators has recently launched what we're calling our Fast Track membership. And so what it is basically is a subscription type service that'll give you access to the whole library of tools and indicators. There's even workshops, recordings, training. Basically, you get like the whole library except for some of the higher tier products, like our Robot Lab, for instance, is not included. Just a heads up. But if you're looking to try out, a few select tools, or if there's a few things that are on your radar, this is a much more accessible way to get to that, to access our library. Some of these indicators are close to $1,000 a piece. So it's definitely a very cool opportunity to kind of tour, get in the sandbox, play around with everything we have to offer. But yeah. Oh, go ahead, Richard. Sorry.
No. I was just reaffirming what you're saying.
Sure. Gotcha. Yeah, we'll definitely encourage you to hit that link. Hang on to it. If you have any questions about that, feel free to reach out to us. Outside of these sessions, as I always mention, you can email us. There's a contact form on the website. You can give us a call. There's a phone number plastered all over the place. So no shortage of ways to get in touch. If you ever have questions outside of these sessions or we're not directly available to you, one of our customer service ninjas will be more than happy to tackle it for you. Well, I don't see any questions coming through, which means only one thing. It's time for our dad joke. Awesome. If you're new to these sessions, what we like to do, just a little fun thing on our way out the door, we share a terrible pun, or as they're known more colloquially, a dad joke. So here we go. Richard, I promised you a golf-themed joke today, so here it is, coming your way in the chat as well. Why do dads take an extra pair of socks when they play golf? Why do dads take an extra pair of socks when they play golf?
No idea.
Anybody here in our Zoom room over on YouTube? Any suggestions, ideas?
No idea. Hit me.
You know what I was trying to do? Was trying to cue up the Jeopardy music.
Oh dear.
I don't think I can get it in time.
Button.
Okay, we dragged this out. Oh, look at Mark. Holy, I think this is the first time someone's answered it correctly. Mark swooping in.
Mark, were you Googling that?
Fantastic, Mark. I wish I had a prize to give him now.
Good one.
We need to prepare for this in the future. We need to give something away for this. John approves of it.
You need to get a button with some of these.
I need to have a few things. I need to set up a few things. I have the Jeopardy music, kind of a buzzer. Yeah. Awesome job, Mark. Well, thank you so much, Mark.
Great stuff.
Yeah, that's fantastic. As mentioned, this is a record. You're the first person to correctly answer one of our dad jokes here in Profits at Noon. So thank you so much, Mark. And in case you didn't hear that answer, it is there in the chat. But why do dads take an extra pair of socks when they play golf? It's in case they get a hole-in-one. So do with that info what you will. Again, laugh, shrug, groan, all appropriate responses to our dad jokes here in Profits.
Well done.
Awesome. Well, thank you so much, Mark, and everyone else who enjoyed that joke and everyone who spent their time with us here today. We always love to hang out with all of you guys and gals. As mentioned, I was out for about a week there. It's great to be back. I will be back on deck for the rest of the week, so that means I'm counting on seeing all of you folks on Wednesday at noon Eastern Time so we can follow up on all the levels we covered today, and potentially if Richard and I can work out some surprises for you yet this week. So stay tuned for that. And then I'll just quickly mention, too, if you need to catch this replay or any replays that have been broadcast on YouTube, unfortunately, the events from last week are not available on YouTube because I was not here to do the simulcast. But outside of those events, we always post these in a Profits at Noon playlist over on YouTube. So you can always get back to them. You can find them again. No problem there. And of course, as mentioned, reach out if you have any questions. We're always more than happy to help. So, Richard, any parting wisdom as we're on the way out the door here?
No, not really. Just Wednesday's economic news events. Who knows how the market's going to react to these earnings as well? But yeah,
Sure.
hotly anticipated federal fund rates. So let's see what happens. And that's not really obviously any advice or so, but we'll see what happens.
Sure. Yeah, absolutely.
Parting wisdom. That's definitely not parting wisdom, but yeah, be careful.
Parting wisdom, come back Wednesday.
Yeah, come back Wednesday. That's good.
We'll have all the latest updates for all of you. So thank you again, everybody, so much from myself, Nate, from Richard here, and all of us at Ninjacators. We appreciate having all of you here with us, and we hope to see everybody back Wednesday at noon Eastern time. So goodbye, everybody. Have a great rest of your afternoon.
Awesome. Cheers, everyone. Take care. See you Wednesday. Bye-bye.